Good day everyone, this is Mama Duko and today we are having a new tutorial video for our accounting subjects, and I will be discussing about business transactions and what is value received and what is value given up or value parted with. We all know, students, that a strong knowledge of basic accounting terminology are essential for successful communication to take place in the reporting of financial informations to internal and external users. And these terms or terminologies provides a foundational core around which of accounting process is constructed. So as a student of accounting, we must be able to fully understood these different terminologies. And then the first terminology that we are going to study today is assets. So what do you mean by assets? Assets are future economic benefits owned or controlled by an organization. And these are the resources that an entity owns in order to derive future benefits. So what are examples of assets? Cash, okay. Inventories, that is an example of assets. Land, buildings, equipment, and we have also called intangible assets. So these are the assets that has no physical form. Example of intangible assets: copyright, franchise, customers, list, and etc. And then another term that we must be fully understood: liabilities. Okay, so what do you mean by liabilities? Liabilities are the debts of the reporting entity to external creditors. Okay, so these are the debts or the obligation that the business must obligation to pay, okay, to external creditors. Or liabilities can be also the obligations to do some service. Okay, so example of liabilities. Okay, so at the end of the month, the employer must pay salaries to the staff. So it means the business entity has to pay salary. So it means salary payable, obligation to pay salary. And then another examples is rent payable. It means the business entity must pay at the end of the month, okay, to the lessor. Accounts payable, okay. And then also we have what we call unearned revenue. So it means the business entity already received the payments, but still we're not able to do the service or still has some obligation to perform service. So unearned revenue is considered as a liability. So another term that you must be able to fully understand is revenues. Okay, so what are revenues? So revenues are the figures that indicate the increase in a company net assets. Okay, so when we speak of net assets, this is total assets minus total liabilities. So it is net assets. Okay, so increase in company's net assets that is created by a sale of goods or services. Okay, so the business entity is generating income through the sale of goods or performing a service to the customers. Revenues is considered the lifeblood of the organization. Why? Because the cash is flowing into the company, or the receivables that comes from generating sales. So receivables means the money that will be collected from the debtors. So that is accounts receivables. Example of revenues: sales revenues and the service revenues. So another term that we are going to study today is expenses. What do you mean by expenses? So these are the decrease in net assets. Revenues are the increase. So expenses is the opposite. It is the deduction or decrease in net assets that are incurred by a company in hopes of generating revenue. So you want to earn income, of course you must spend, because you want to earn money in return. So according to matching principle, no revenue can be earned without incurring corresponding expenses. So example of expenses: utility expense, like electricity, water bill. So these expenses are used for the operation of the business, or the cost of goods sold. So that is an example of expenses. So don't forget, students, to remember these important terms. Now we go to business transactions. So what do you mean by business transactions? So business transactions is an economic event or condition that directly changes in entities' financial conditions, or directly affects its results of operations. And accounting transactions take place when a business exchanges a thing or things of value for another. So in short, in business there are two values involved in transactions: the value received and the value given up or parted with. So when we speak of value, it means anything susceptible of pecuniary estimation. So value can represent money, property, service, or rights. And also remember, students, that transactions are always looked upon the business point of view, which is separate and distinct from the owner's point of view. So that's what we call the principle of accounting entity assumptions, that the business is separated from the personal life of the owner. I have here different transactions in which we are going to analyze what is the value received and the value given up. So the first transaction states that the shares of capital stock were issued for $10,000 cash. So what will be the value received? So the value received in the point of view of the business is the cash. And then what will be the value given up? So the value given up is the capital stock or the ownership right. Then the second transaction states that a horse stable and riding equipment were rented and paid for the month at a cost of 1,200 US dollars. So what will be the value received? Okay, so the value received will be the right to occupy. So it means it is the rent expense. Okay, so rented and paid for the month. And then what is the value given up? Okay, in exchange for the right to occupy. So the business entity pay cash. Okay, so the value given up is the cash. Then the third transaction states that horse feed used for the month was purchased on credit 800 US dollars. So what will be the value received? So the value received is the feed expense for the horse. So the horse feed was used and then it was purchased on credit. So what will be the value given up? So the value given up will be accounts payable. It was purchased on credit by the business entity. So it means the business entity has an obligation to pay to the creditor. Okay, so the next transaction states that boarding fees of 3,000 US dollars for June were charged to those owning horses boarded at the stable. So fee is due on July 10. So what will be the value received? So it means that the business entity earned income from the customers. Okay, so boarding fee. So what will be the value received? Okay, and then also you look closely. The fee is due on July 10. So it means the business entity has the right to collect. Okay, so account receivable. Okay, so what is the value given up? So the value given up in exchange for account receivable is the services. Okay, boarding fee revenue or the services offered to customers. Okay, so another transaction, it says miscellaneous expenses of 600 US dollars were paid. So the value received is the miscellaneous expenses, and then the value given up, okay, it were paid on cash. Then another transaction states land was purchased from a savings and loan association by borrowing 40,000 US dollars on a note from that association. Okay, so what is the value received? So the value received will be land. Okay, and then the value given out, it was borrowed. It was purchased from a savings and loan association by borrowing. Okay, on a note. So the value given up will be notes payable. Okay, another transaction, it says salaries of 700 US dollars for the month were paid. Okay, so what is the value received? Of course, the salary expense. Okay, the services performed by the employee, and in return, okay, so the business entity will pay salary. So salaries expense or the services performed by the staff. And then what is the value given up? Cash. And then the last transaction states that riding and license fees were billed to customers in the amount of 2,800 US dollars. Fees are due on July 10. So what is the value received? Okay, so the transaction states that billed to customers and the payments will due on July 10. So it means the business entity has the right to collect receivable. So account receivable is the value received, and the value given up is the riding and lesson fees revenue. Okay, so in exchange of account receivable, okay, so the business entity had performed a service to the customers.